we bring in our panel to discuss Adobe, and Nick Raich is with us, CEO of the Earnings Scout, and Jeff McClean, managing partner at Solidarity Capital. Nick, I'll start with you. Your thoughts on Adobe?
Well, it's an important one to us because it will be the fourth company in the S&P 500 to report results that classify as second quarter 2025 for us. So first quarter earnings season's all but over. Only Kroger's left to report April quarter end. But what we're looking at is trying to see the guide, and Oracle was last night, is to see the revision trends of these early reporters that are going to be reporting May quarter end, such as Adobe tonight, and to see if the improvement that we've been measuring ever since Trump did the pause on tariffs on April 9th continues. So for the estimate revisions, what we're going to look at, we don't care about the 497 that it's expected to make for this current quarter, or the 5.8 billion in revenue it's expected to make this quarter. It could beat, it could miss, it could come in line. We care what it says about the future. And then collectively, we're going to see these early reporters, are they collectively seeing their estimate trends improve to keep this rally sustained?
Yeah, Jeff, people want to know, is Adobe a winner? Are they keeping up in the AI race, in the AI space? And you said, in one other concern, Jeff, you noted some of the competition in the space too.
Yeah, that's right. I mean, they have some stiff competition headed their way. They're developing in the AI space, growing that internally of AI-specific products. So they said last quarter, right, they did 125 million to AI-specific new products and said that could double by year end. I want to see, does that trend continue of growth of AI-specific revenue growth in their space with new products, and can they implement the tiered pricing for new AI features on existing products? That's what I'm looking for, if they can keep up and keep measuring up and hit their targets.
Sure, you said they have a huge head start in entrenched software, but they do have real competitors. You said Canva, Sora. There's going to be things we never even heard of coming up in here, right? Jeff, a final thought on the competition.
Yeah, I think Adobe's best way to attack the competition is starting to do what they're doing now, which is they're investing as an angel investor through their VC arm in a lot of these AI companies. They need to keep that up and maybe, just maybe, follow that example that Meta did just recently with their big acquisition of Scale AI, where they came in as a 49% owner of it. That's what I'd like to see from Adobe, playing harder and more aggressively in the AI space.
When we think about the AI space, I mean, Nick, this is monumental at this time for Adobe. I mean, what have we seen from Adobe in the past? Do you expect to see much of the same? In other words, they better deliver.
Every company has to deliver, but yes, in the AI space, this is relatively new territory for it. And if it doesn't evolve and have Firefly take off, competitors will come in and eat their lunch, which has never been the case for Adobe. Adobe has the good recurring model. It's the premium for creative designers. And it's had very stable estimate revisions and solid growth prospects, which has made it a great investment. So we want to see the stability in its estimate revisions continue, and its high growth prospects continue. And that gives it its moat around the business, which it's had for a long time. But if it doesn't evolve into the AI space, yeah, competitors will come in and eat their lunch, but we haven't seen that happen yet.
And look, RBC says Adobe is likely to deliver some solid second quarterly results, but it did trade as low as $332, and year to date it's down, and 1 year it's down. It hasn't necessarily, Jeff, really made the shareholders feel too happy, even with buybacks. I mean, that was somewhat interesting, but overall, the shareholders are down 10% in 1 year.
Yeah, that's right. I mean, what we're looking for, admittedly, is some of the shareholders in the market to kind of catch up and recognize what they're doing. Great valuation, great free cash flow numbers. And they're coming in strong in a lot of everything what you look for a technology company in this space. They're the behemoth, they're the existing one, but their growth rates are still really good. They've been beating quarter over quarter, and every time they beat each quarter, seemingly their stock keeps going down. And so a little bit of this is Adobe needing to catch up in growth in AI, and a little bit of this is the market needing to recognize what they have here and that the numbers have actually been really good. And so if the market can get over the AI fears associated with Adobe, I think you're going to see their stock continue to go up because it's been beaten down. It's about flat over a 5-year period. And so there's got to be some recognition also by the market of, hey, this company is doing really good. It's a really good valuation, free cash flow. They hit everything a traditional investor would look for from an opportunity.
And one of you mentioned Firefly. They did launch the new Firefly application for AI-assisted content. Nick, I'll give you a final word.
Yeah, well, that's what we want to see. We want to see that it's starting to monetize that because it's been a little slow. It's in the early innings of that. So where I say we need to see in the guidance where it goes. And one of the reasons why the stock has suffered over the past year is on a rate of change basis, while the estimates have been stable, they've been weakening a little bit. So we need to see it get back on a path of improving on a rate of change basis where the estimates start to go up at increasing rates for the stock to really take off.
All right, Nick Raich, CEO of the Earnings Scout, and Jeff McClean, Managing Partner, Solidarity Capital. Thank you both so much for being with us.